Hello, this is Jordan. This video is being recorded on the evening of Monday, March 13th, 2023. Going to provide a little update on the gold market here. I'm calling it my weekly outlook. I didn't get around to making this yesterday. I apologize for that, but it's a good thing I waited a day because today we saw gold take out 1900, and it closed at 1916, excuse me. And so starting off, these are the two leading indicators that I'm watching for gold. Gold against the S&P there in the middle, and gold against foreign currencies. Another way of looking at that at the bottom is gold multiplied by the US dollar index. And as I've said in so many past videos for years, the reason these two are important, and especially gold against the S&P, is both of these ratios, they tend to lead the gold price at important turning points. They tend to typically, or I should say usually, they make a higher high before the gold price will. If you go back to the early 2000s, there's quite a few examples of this. I don't want to belabor the point. You'll just have to trust me on it. After the COVID crash, that was one instance. 2008, September, market was falling apart. Precious metals were getting hit hard. Gold against the S&P, gold against foreign currencies, they made higher highs before the gold price did. So these are important leading indicators. I'm very concerned with them right now. Just concerned, not negatively, but really concerned how they're going to perform here in the very short term. And you can see, looking at the light blue lines there, gold, of course, made lower lows in 2022. That proved to be a false breakdown. And you can see that gold against the S&P, gold against foreign currencies, they made higher lows. Now, all of that aside, let me get into the very short term. If you look at gold against the S&P and gold against foreign currencies, and you see those red lines, those horizontal red lines showing resistance, that's what I'm watching for in the coming days. Can we see gold against the S&P make a new high, perhaps even exceed the high that it made in, looks like June of 22. June of 22, that high was, I want to say, 0.504. So the ratio closed at 0.497. So do the math on that, but that's a very tiny percentage. So a little more of a push from gold against the S&P, some more outperformance there in the coming days. You could see gold against the S&P. That will be really close to a 2-year high, essentially. Or if we do get that push, it will essentially make a 2-year high. Gold against foreign currencies has a little bit more to go, but nevertheless, if you look at where it is now, it's really close to, but if it can push above that line, really just a hair or two, it would be looking at about 11-month high. Now, it has to go above the March high to make a new all-time high, but it's not that far from that. So looking at those two ratios, if they make higher highs in the very short term, I think you could see some more upside for gold, and it could possibly push above 1950. And at the top there, that's the line, 1950 resistance there, the red line. And it's also weekly and monthly resistance. So keep an eye on that over the next 2 weeks. Let's see if gold can make a weekly close above 1950 and then a monthly close above 1950. Boy, that would be really good for gold. And who knows, maybe gold could break out here in the next 3 or 4 weeks or so. I'm not predicting it. I'm just saying it's not that far out of the cards. And again, going back, if we see these two ratio charts here, gold against the S&P, gold against foreign currencies, if they make higher highs in the coming days, that raises the percentage chance that gold can more so rally back to its all-time high, but at the same time maybe even break above it. Now, just filling in here, I'm more concerned with gold against the S&P than silver against the S&P. Gold has been outperforming silver recently, and I tend to think, we're probably coming into a recessionary environment. Not necessarily, you can call it a disinflationary environment, but it's more recessionary. And deflation, some deflation issues with the problems with the banks. And so in that setup, you're going to see gold outperform silver. Of course, if you have a day like today, silver can outperform. But if we're looking at these ratio charts, and you're just looking at the performance over the last, since that bottom at the very beginning of 2022, the gold against the S&P, that chart is more bullish. I mean, they're both bullish, but gold against the S&P is more bullish and stronger. And so there's two key resistance levels for gold against the S&P. I've labeled them 1 and 2. So number 1, you break above 0.50, you have a measured upside target of, I think, at least 0.60. So if the market breaks above 1, it's probably reasonably, if you would reasonably think it's probably going to test 2 at some point. And look, you see gold against the S&P break above 2, break above 0.65 or 0.70. That's a signal of a new secular bull market. I mean, I've talked about this, and the comparison to that was the gold stocks against the S&P ratio in the mid 60s and the breakout there. So breaking above 2, that's a new secular bull market. Breaking above 1, you have a new cyclical bull market. And again, I do think gold is going to outperform silver here in the short term. I don't think silver is really going to outperform until you see gold move above 2050 or 2100. Now, getting more into the short term with respect to gold and silver, these are the daily charts. Looking at gold here, you can see the red resistance arrow, that's at 1950. In the last video, 8 days ago or so, I talked about 1875. That was a key level. Of course, gold has blown through that. If you look to the right, the market gapped up. So, 1865, 1866. There's an open gap there. So I don't know. Maybe that fills. It's always a risk in the very short term. But if we see gold explode up to 1950, close the week at 1950, and hang on to the gains this week, that's probably going to be a signal that you're not going to fill that gap, and that gold can indeed break above 1950 over the coming weeks. Now, with respect to silver, traded right up to 22 today, closed a little bit below it. So you have resistance at 22. Then you have a lot of resistance at about 24.5. And also you have resistance at 23. I should have put a line in there, but you can see, I mean, that topping pattern, from December, I mean, what was that? Lasted 7 weeks where the market was just trading from, mostly 23.5 up to 24.30 or whatever it was. I mean, that there's going to be some supply in that area. So looking at the short-term technicals here, I definitely favor gold over silver. But again, don't get me wrong. If you tell me that gold is going to blow through 2050 or 2100 in the next month or two, then of course you would rather own silver than gold, because I'm presuming at that point you get the major breakout in gold. Historically, that's when, around the time when silver really starts to outperform gold. But again, looking at the very short term here, I just over the next couple days, I think, probably until gold can break above 2050, I think until that point, silver is not going to outperform gold. Now, finally, closing it off here with the miners. You can see the candles here the last couple days in the miners. They're not as strong. I mean, you have huge gaps in all of these, GDX, GDXJ, SILJ. You can see the red resistance lines there. So GDX has resistance at 30, has that huge open gap. So it possibly could hit some supply at 30 or 31 for GDXJ. It has resistance at, 36, 37. And then SILJ, initial resistance is at 10.5. And so this is where we are for the sector, where I think, at least in the very short term here, gold is probably going to be stronger than silver and the mining stocks, which is okay, because we're seeing the macro is turning more in the favor of precious metals. And, eventually I think when we see gold, looking at if it can make that weekly or monthly close of 1950 or trade up to 2050 again, I think around that point, that's when you'll see the miners and silver really start to get a lot more inflows of capital. But here and now, I think in the very short term, gold is going to be the play, at least for most generalist money. So with that being said, we're seeing positive developments in precious metals. Definitely got to keep an eye on everything, and we'll see what happens with the weekly and the monthly close in 1950 for gold, as well as those two ratio charts, gold against the S&P, gold against foreign currency basket. Those are the three key things to watch over the next week. Thank you for tuning in. See you guys in the next video.